Okay, here's the follow-up video for using OneOp on stocks. And I want to go over 4 examples or 4 instances where OneOp will not help you. And just to show that this isn't like a magic bullet or anything like that, it's just another useful piece of information that you can use. Remember, OneOp tells you what should be happening, assuming nothing changes about the outside influences in the stock. So if we just keep looking or predicting based on the previous price action, the buying, the selling cycles, this is generally what should happen next. The bulls get their turn, the bears get their turn, etc. But there are 4 situations in which something could completely change, and then OneOp can't predict that because it's just coming out of nowhere. And then it totally changes on you and you're like, well, what the hell? OneOp said it was going to go down. It didn't go down. These are the 4 situations that you need to be aware of. So first, OneOp won't tell you where support and resistance is. So, for example, plug. Plug was very weak on Thursday, and it had survived previously a bear cross or bull cross. It was dropping, and it was in a slow cross right up through here, and had just crossed over to go back down. And I thought, okay, this is a really kick-ass place to short, especially because SPY was going up the whole time. So plug was nice and weak. And I was expecting maybe a drop from here or from here with this double top through here to take a lotto. So I thought, okay, a lotto would be perfect right through here. And then I would get my fresh cross, and this thing is definitely going to happen. So I took the lotto on plug, but I immediately got stopped right through here and it reversed. And you're thinking, why would it reverse? Because it had a chance to go up through here. Why all of a sudden in the middle of the cross did it just bounce all of a sudden? Remember, I didn't know it was going to bounce right back down. Well, that was because plug was just bouncing off a trend line. Super simple, stuff like that. So OneOp is not going to tell you whether or not something's going to break it. Now, if it was hovering on that trend line, you get the fresh cross and it punches through and then it gets follow through and you get the cross, cool. But things like this, like it won't tell you if it's going to break an algo line or an SMA. It won't tell you if it breaks through a liquidity wall, all that type of stuff. So you still need to use technical analysis, price action, etc. So that's the first thing. The second thing, it will not tell you when sectors rotate. And that has been extremely tough lately. You can almost guarantee lately in the market that the sectors will rotate. So that's not Tesla. Here's Tesla. And this one got a lot of people 2 days ago. So on Wednesday, right through here. Beautiful place to short, right? Because we have that bear cross. We have this massive bull cross all the way back up top. And then we get this crossover, and I'm thinking, great, PDS time. Let's take a PDS. Let's take a debit spread. Let's take this thing down. But then all of a sudden, it just doesn't go anywhere, and it starts ticking up. It gets to there, and you're like, why the hell is it going up when it could have done that here? It was their turn here. Well, what happened here was the consumer cyclical sector stopped selling off. That's essentially what happened. So this was a massive sell-off in consumer cyclical, and it stopped selling off. And because Tesla technically wasn't weak in its sector, even though it was relatively weak to the market, it was actually being dragged more down by its sector through there. As soon as it stops selling, Tesla pops back up. Now, it's still a bearish chart. It still won the next day. But if you were frustrated why the OneOp all of a sudden did the opposite on you, that's what happened. So as soon as I saw that happening, I went, oh, sector rotation. I just took a 5% loss instead of a 100% loss. Now, I could have won the next day, but I'd rather just take a 5% loss because if these things win, they're going to go like 40, 50%. So that's the second reason. Here's the third reason. It will not predict or tell you what's going to happen when there is news catalyst or algorithmic related buying. So FOMC stuff or economic reports or whatever, the OneOp is not giving a good gauge of what should be happening, right? So BA is one that pops all the damn time based on news because, you know, they're selling planes or something with China or whatever. But here's what happened to BA. So you get this nice pop and then you get this cross back down, but halfway through it, even though we're still bear crossing, we get a bounce and we're coming back up. So you think, damn, that's a divergence. Let's go for it. Not necessarily, because this is just algorithmic action and it can't be predicted because it's not normal buying and selling. So as soon as you get another cross over top through here, you're going back down. You thought, well, what the hell? Because last time it bear crossed, it actually popped up halfway through it. So why isn't it just continuing back up? Why isn't it going flat? and going up again. Well, that's because the nature of why this price action is happening. If you get something like this is more speculative. You're going to take like a lotto or something, or just use pure price action reading to try and figure out that type of trade. So that's the third thing. So we've got support resistance. It won't predict that. It won't predict sector rotation. It won't tell you what to do during catalyst or algorithmic related buying. The next thing is volume. If the relative volume is low, it is flighty. It's janky. It's choppy. It's all over the place. You can't rely on it as much. Look at these stretches right through here. Lately, SPY has been extremely low volume. It's been very hard to read the OneOp because the volume is so low. And the analogy that you can use is that there just aren't that many people on each side of the team. There's not a lot of people on the bull team. There's not a lot of people on the bear team, which means anytime another team member shows up, it changes things a lot. So you could have like 3 guys on one side, 3 guys on another side, and a 4th guy shows up, and all of a sudden one team is 30% stronger. If there's 100 on each side, a 1% strength difference, you wouldn't even register it. And that's also why you do not want to use OneOp on low volume stocks. If the stock is low relative volume, then the OneOp is just reading the natural background kind of oscillation of the stocks that are just getting pulled around by the market in general. At any point in time, some big whale could come in and grab 50,000 shares or something and totally change the whole thing. So you want to make sure there's already enough relative volume on it that any big player can't really do much on their own. You want a concerted effort. And those are the 4 times when OneOp doesn't really work on you. So you got to keep that in mind as well.